Following last week's key rate cut by the Bank of Korea, commercial banks are said to be planning on lowering their average deposit interest rates. Experts say this could bring about an adverse effect on the elderly who lean heavily on interest given by banks as their source of income. Kim Chan-ju has more.
These days, it's considered almost impossible to save a decent amount of money from the interest given by local banks.
I'm having a hard time making ends meet because the interest rate can't catch up with inflation.
Deposit interest rates here in Korea have dropped sharply over the last 6 years. The one-year fixed deposit rate that reached 5.87% in 2008 slipped to 2.68% in June. The rate has continued tumbling over the last 2 months, with most commercial banks currently offering interest rates in the low 2% range. But experts predict they'll go down even further after the Bank of Korea cut the benchmark interest rate by 0.25 percentage point to 2.25% last week. They say it might not be long before interest rates are in the 1% range, since the local economy is not showing strong enough signs of improvement.
We'll closely monitor the effects of the rate cut and come up with appropriate measures to deal with changes to consumer behavior and household debt.
Japan already experienced a similar situation and entered an ultra-low interest rate era a long time ago. Its 1 to 3 year fixed deposit rate averaged just 0.35% at its highest. The elderly suffered the most since many of them live off the interest on their savings. Local economists say Korea should come up with countermeasures such as raising pensions if it wants to avoid social and economic problems stemming from low interest. Kim Chan-ju, Arirang News.
Now, on the other hand, though, debt holders welcome the central bank's rate cut. The Financial Supervisory Service expects households and companies to pay around $1.8 billion less in interest payments annually as a result. The rate cut is expected to reduce local banks' profits in the short term, but an official from the agency says the profitability of the banks will improve in the long run as the move will decrease the likelihood of defaults by lenders.